Hello traders, this is Kevin Loughlin. I am a harmonic counter-trend trader, and as the name suggests, I use harmonic patterns in my trading. I also use Elliott wave principle, and to inform my trading decisions I use classical technical analysis and Japanese candlestick patterns and a few other things besides. This evening I'd like to look at 4 currency pairs, 2 of which I'm currently involved in and 2 which are exhibiting quite good Fibonacci percentages. So the first one I'd like to look at is one I got involved in just before Christmas, and here it is. What I liked about this were the Fibonacci percentage definitions, where we have a retrace just beyond the 61.8 of XA, coming back up into 50 plus at C, and I'm involved in about this area here, which I can confirm as, let me see, my entry point on this one, on the euro against the Great British Pound, is at 8393. Yes, I've front run it a little bit beyond, just above the 886 here, and I'm currently suffering a few pips of pain, about 23 pips of pain. It was more pips of pain before this, where it had come down here close to the X support area, but my stop is just below this area here. It's an 886 Gartley, could be defined as a bat as well, because we got a little pull down here. This could be a B, this could be a C. Again, the defined PRZ, price reversal or potential reversal zone, being 886. Relatively good risk reward, roughly a 1-to-1 on this, and so I'm hoping for this to come back up. Now, slightly in terms of correlation of pairs, I got involved in the GB pound against the US dollar today. Already I had taken some profits off here, with an entry point here off this bat, and I took my profits off here from here. So I'd taken off 725, so about 55 pips of profit. I left my second half on at break even at this point, but the market rallied, come back up and took me out, and I was all flat at this point. Since then it's come down into a 50 retracement here, back up into a 61.8, which is quite a nice fib, and my entry point in this is around this area. I actually front run it to 460, just around here, and I'm hoping for a target of here. My target might change as the CD leg might come down and might challenge the X, so my target might come down and be revised in this, but again my stop is below X, and being an 886, again there's quite a good risk reward. You know, I'm hoping here for a 50, I think I'm looking for about 100 pip profit on this one, if it plays out in accordance. So we have spiked 886, we're coming into a nice 4-hour over sold situation, and that's the same in lower time frames as well. So this one's ongoing. So this is a bat pattern, harmonic pattern. Channel was broken with this big power bar down into here. Looks like a freight train. Might seem a bit crazy stepping in front of a freight train, but as a counter trend trader, you shouldn't be afraid of a freight train. You know, it could be light at the end of the tunnel, or it could be the fabled freight train. So we just got to wait and see. Trade the plan the trade. We're being predictive rather than prescriptive. We see nice fibs setting up, and we can plan ahead, premeditate our entry points, our risk stops, and our targets, and we trade the plan, and we're just looking for consistency over time. As we know, each individual trade is a random event, but if our edge, i.e. our plan, our strategy, gives us a high probability of success over many trades, then we will tend to stay in profit. So we're looking for about 100 pip profit on this one. Yeah, from a correlation point of view, if the euro and the GB pound drop, as let's see, So sorry, if the Great British Pound gets stronger, then this one will drop and go against this trade. So I'm hoping there's enough leeway in this to allow some profits in this before this would fall, and perhaps vice versa. So it's almost a bit of a hedge, but I'm hoping to get out, take some profits before my stops are taken out on either one of these. Now another one I'm looking at is the Aussie dollar against the Japanese yen. Again, we've got some nice fibs have set up. We've got a nice, virtually perfect 618, and this, what would be a Gartley pattern, if this comes back up, breaks the B point, gets overbought again, and potentially could come up into a 76 is your classic PRZ, potential reversal zone for a Gartley. I've seen more than enough of these Gartleys actually coming up into an 886 retracement. So my rules are defined by the RSI conditions, either overbought or diverging. So we're looking for this leg, the CD leg, to complete up around here. Could come up in towards the 886 as an equivalent AB equals CD, as described here. Or alternatively, again, we're being predictive rather than prescriptive, planning ahead, seeing nice fibs. We've got a 618, a 618. This is just come up in, but did actually quite get up to the 786. It's between a 786 and a 618 here at this point. If this comes back down in the 786 or even an 886, depending on what the RSI is doing again, then I'll be looking for an opportunity to come in and come in on a long opportunity, a long situation, or if it comes up into here on a good RSI, I'll be looking for a short opportunity. If it comes down into here, from here, again we've got significant structural resistance around this area. So it's a 7736, 7596, so say 7600, and 734. So you could be looking at 100 pips profit there potentially, up into 382, or it could move further, come back up. This could be known as an aggressive C buy, because we've got a 618 here, 786. We do have a bit of structure over here, a bit of confluence or consolidation a bit here as well. Okay, so we've got to wait and see what it does, but again, as I keep repeating, we're being predictive rather than prescriptive, because no one actually knows exactly what the market's going to do next 100% of the time, and we work in probabilities. So another pair is another Aussie pair, which is the Aussie against the US dollar. And again, what we're seeing here are some nice fibs. If you look at this leg here to here, we can see a retracement of just over 61.8. One pattern I was looking at just for Christmas was a potential for a bat completing here, but it didn't actually make it down to there. So in this case, we're looking at above a, I think we're looking at it just there, it looks like a 618, 786. Yeah, so sort of halfway between, just beyond halfway between the 618 and the 786. Again, that could have been classified as an aggressive C buy. If it comes back up, breaks A, does on quite a good RSI, i.e. it's overbought or diverging, coming up into here, then I will be looking to see if there's a short opportunity. So looking at the predictive pattern, and if it completes around this area, which is 10.522, 10.520 say, it comes down to 268. So you could be looking at perhaps 230, 240, depending if you front run it. Depend again on what the RSIs do at the time. You might be looking around 200 pips profit on this one. And again, this 302 is coming back down into historical structure. Some consolidation coming across. Oops, a bit more structure over here. So be looking to take some take a short opportunity and take some profits of it. So that's it for this week in the weekly update. I hope you find this useful. I'm very grateful that you take the time to actually watch the video. If you have any comments on harmonic patterns, Elliott wave, or any other aspect of technical analysis, then please send in some feedback, and it'd be nice to get some decent discussion going on these subjects. So in the meantime, good trading, keep safe, and a very happy new year.